Judges ready? Opponents ready?
Yes.
Okay. Beginning my time now. Hello, my name is Sumedha Katakam, and I'm debating on the con side of the resolution, or topic of debate, by Bitcoin. Bitcoin is a form of digital money or cryptocurrency that allows for direct peer-to-peer transactions on the internet. It utilizes a system that doesn't depend on any one central power, a decentralized system called the blockchain. It does this by relying on Bitcoin miners, groups that use computing power to verify transactions. This debate should be judged by evaluating how effectively each team demonstrates that the positives of their ideal course of action outweigh the negatives. In other words, using a cost-benefit analysis. Now let me begin with my constructive. Contention 1, volatility. Subpoint A, no backing value. Bitcoin's intrinsic value is vague because there's no stable asset or value proposition backing it up. Data from SurveyMonkey shows that 60% of people who have invested in cryptocurrency did so solely because they believe it has potential. However, short-term capital gains tax regulations that tax Bitcoin at the same rate as income, which according to IRS rules could be up to 37%, could eventually pop that interest bubble. This is proven to be probable in history with the dot-com bubble, where internet-based companies grew up to 5 times their value in the 1990s to the early 2000s, only for the bubble to pop, with stocks falling up to 80% in value. According to Motley, Bitcoin is fueled by interest in not unique use cases, so it could very easily face a bubble pop like this, leading to repercussions in its value and trading ability. Subpoint B, vulnerable to fluctuating supply and demand. Bitcoin's value mainly depends on supply and demand, which can fluctuate almost randomly. According to CoinMarketCap, the most Bitcoin's value has increased in a day is by 13%, compared to the largest drop in value of around 50%. This shows that short-term investments can have negative consequences at greater magnitudes than positive ones. The value of a Bitcoin can also be greatly affected by pump and dump schemes, which are illegal schemes to boost a stock price by exaggerating and misleading. For this reason, while Bitcoin may appear solely peer-to-peer, other parties can manipulate the value of the cryptocurrency in disadvantageous ways. Contention 2, relatively new technology. Subpoint A, blockchain technology not established. According to the Motley Fool Stock Advisor, around 40% of Bitcoin in circulation is controlled by various small groups of investors. Because of this, there are only $114 to $125 billion in Bitcoin in circulation, compared to the global gross domestic product of $81 trillion. The blockchain technology that Bitcoin uses cannot scale. Additionally, Bitcoin transaction costs average at around $28 due to tax regulations, which is about the same as a bank wire transfer. This proves that Bitcoin's blockchain is not as scalable and foolproof as portrayed, making it not worth buying into. Subpoint B, risk of fraud/theft. In 2021, scammers stole $14 billion worth of Bitcoin. Because transactions are anonymous on the blockchain, law enforcement cannot easily track transaction activity, making it desirable for illegal and scam purposes. The blockchain being a new technology makes it vulnerable to many holes in the system, making it an unstable, unworthy investment. Contention 3, possibly better alternatives. Subpoint A, less energy intensive options. According to an analysis by the New York Times, mining 1 Bitcoin, which is the act of verifying a transaction on the Bitcoin network, would cost a home $12,500 in electricity, which is, according to Statista, equivalent to 100,000 Visa transactions. The method that Bitcoin uses the blockchain for is incredibly energy inefficient and heavily contributes to the effects on climate from the emissions from energy usage, making it undesirable to miners for transaction uses. Comparing this to other cryptocurrencies, Ethereum, the second most popular cryptocurrency, requires less than 1/13 that of Bitcoin for a transaction, and Ethereum 2.0 1/1300. Subpoint B, low barrier of entry. According to Bitcoin transaction data, it processes 4.6 transactions per second, compared to Ethereum 2.0's processing speed of 100,000 transactions per second. Ethereum 2.0's transaction system is much more energy efficient than Bitcoin's. There are other cryptocurrencies that have more desirable qualities than Bitcoin, such as the smart contracts of Ethereum and the relative simplicity of creating a new cryptocurrency, only requiring an understanding of blockchain coding, making it difficult for Bitcoin to sustain its #1 spot. Thank you.
Cool. I have 4 minutes on the clock for our second constructive speech, beginning when you're ready.
So, judges ready? Opponent ready? My time, just give me a second. My time starts now. Hi, my name is Krish PRO here, and I'm debating on the pro side of the resolution buy Bitcoin. Assume that the resolution isn't telling you a specific time to buy Bitcoin. The winner of this debate should be used by whoever brings up the best balance of costs and benefits under the resolution, also known as CBA. Defining Bitcoin. Simply, Bitcoin is a digital currency that is not manipulated by a central force, such as government and banks. This means it's decentralized, and it also has a peer-to-peer transactions without permission from anyone else. Contention 1, efficiency. Subpoint A, purchases are beneficial. You should always invest money that you are willing to lose. After all, it's like getting a chance to win money with the penalty having no severe consequences. And if you're willing to lose that money, you might as well try to win big. Cryptocurrencies have the highest return rates out of any other investments. If you're worried about not being able to make flexible investments, remember that you can buy parts of Bitcoin and invest with as little as $25 while getting a huge profit in return. Subpoint B, versatility. Due to the fact that Bitcoin is decentralized, there are a lot of benefits and possibilities. First of all, transactions are completely peer-to-peer. This means that you no longer require approval from a third party for transactions. You no longer need to pay banker fees for simple withdrawal and deposits. When you need to send money internationally, Bitcoin usually has lower transaction costs, speeds, and can sometimes have better exchange rates than the common currency. In the end, Bitcoin has many more advantages than simple fiat currencies. Contention 2, safety. Subpoint A, hackers. Since Bitcoin is a relatively new type of currency, many people worry about the safety or lack thereof. However, the Bitcoin network itself is very secure. All transactions are recorded in a blockchain, a series of digital ledgers that are constantly being reviewed by users. Because of the technology of the blockchain and the constant reviewing, Bitcoin itself is practically impossible to hack. And according to many sources, such as Investopedia and Money Under 30, Bitcoin itself has never been hacked. Comparatively, the Federal Reserve has been hacked 50 times in the last 5 years. Subpoint B, government. Because Bitcoin has no third party, Bitcoin cannot be seized by a higher power. With fiat currencies, governments can always stop your transactions, or at least they can monitor them. In China, it is very difficult to buy gold in foreign currencies, and patrolling makes it very hard to get money out of the country. But Bitcoin cannot be censored. Even when China outlawed crypto, the network itself remained very alive. For these reasons, Bitcoin has much better security than regular currencies. And finally, contention 3, scarcity. Subpoint A, Bitcoin cap. Bitcoin is quoted to only have 21 million tokens at max. Once this happens, Bitcoin can no longer be generated. The price of Bitcoin will shoot up, and selling your Bitcoin would give you huge profits. In fact, assuming that Bitcoin would have the same market cap as gold, each Bitcoin would be worth $585,000. You could earn a huge profit by investing right now. Subpoint B, digital gold. Bitcoin is also referred to as digital gold because of its rarity and potential inflation hedges. This is where people invest their money in something else when inflation itself increases. Their money is protected as what they invested in isn't affected by inflation. Bitcoin is an example, as Bitcoin won't cost 21 million tokens. In fact, Bitcoin could even replace gold. It's quickly transferable, cannot be confiscated, and is better for payments. So Bitcoin can be an option to resist inflation in the near future. It has a lot of potential, which brings a lot of benefits down the road. In the end, Bitcoin can net you a lot of money and has many benefits over regular fiat currencies. As long as you keep your account information safe, you won't lose any money to hackers. Bitcoin has its benefits over stocks, bonds, and other cryptocurrencies. Its only risk of being volatile is negated if you spend your money wisely. For these reasons, the judge should reward Pro at the win. Thank you. I yield the rest of my time.
Cool. We're going to go now into a period of prep time. I have 1 minute on the clock beginning now.
Judges ready? Opponents ready?
Yes.
Beginning my time now. Tax rates for taxes on Bitcoin profits are the same as income taxes, which means they can go up to 37%. Do you agree that tax regulations like this could possibly lead to a loss of interest in crypto, similar to what happened with the dot-com bubble in the 2000s?
Well, I believe that although Bitcoin itself, the taxes might be same, this isn't exactly a solid rule that would change. And of course, Bitcoin, taxes could be decreased. Even if this isn't the case, Bitcoin can still nets a lot of money. So in the end, the lure of getting so much money would eventually outweigh the taxes.
Do you agree that there's no stable asset that backs the value of Bitcoin?
Although I could say that there is no asset that's stable, I can still say that it has potential. For example, many investors are starting to look towards Bitcoin as a digital version of gold, and it could essentially even replace it. Moreover, there are many new mainstream companies that are starting to join Bitcoin, such as PayPal, Microsoft, and other big companies. They'll probably.
Okay, thank you. How do you respond to the Motley Fool stock advisor stating that 40% of Bitcoin in circulation is controlled by small groups of investors? leading to only $114 to $225 billion in Bitcoin in free circulation.
I would like a bit more explanation as to how exactly that is a negative impact.
That's because Bitcoin is obviously limited in value, like you have said earlier, the 21 million quota, and 40% of Bitcoin is owned by small groups of investors. So only $114 to $225 billion of Bitcoin are in free circulation, and the global GDP is $81 trillion. So how do you respond to this?
I would say that it's not necessarily a bad thing, even if not entirety of Bitcoin is going through free circulation, as this number can obviously change over time.
Okay, thank you. I believe my time is up.
We're going into our second cross-sex, 2 minutes on the clock, beginning when you're ready.
All right. Is my opponent ready?
Yes.
Okay. I'm starting my time now. So you mentioned that supply and demand is very important in crypto, right?
Yes.
And you also mentioned that Ethereum would be a much better alternative to Bitcoin, didn't you?
Yes, I did.
So the thing is, Ethereum actually has much fewer users than Bitcoin. So if the supply and demand ratio in Ethereum is much lower, that could potentially make it much more volatile, couldn't it, than Bitcoin?
I actually don't agree with that. Number one, because the demand of the supply of Ethereum could be less than Bitcoin, making the ratio between supply and demand actually not. Yeah, so I think that the supply of Ethereum is less than Bitcoin. So the ratio between demand and supply for Ethereum is actually higher. And Ethereum in 2021 grew 530% in value, which is more than Bitcoin grew in value during that period of time.
Well, if you're going to go ahead and say that Ethereum is growing in worth faster, aren't you the same person who said that websites like .com were also had original increases but then fell?
Yes,
So
and I do think that cryptocurrencies will eventually fall, but if you are in support of cryptocurrencies, I'm saying that your points don't necessarily hold true because Ethereum is more, for now, I guess. For now, Ethereum is more.
I guess what I'm trying to say in the end is, according to Motley Fool, because Bitcoin has many more investors inside, this means that it's going to be it's relatively less volatile compared to other cryptocurrencies as they have more stable amounts of money going in.
Is that a question?
So eventually, I'd ask: would you still say that Ethereum is more stable and is better, even after it would be more unstable?
Well, I think that you can make more of a profit off of Ethereum.
Okay.
Cool. Going to go into a period of prep time now. I have 2 minutes on the clock, beginning now. I'm not sure if I was muted when I just said you're good to go.
You are muted.
Cool.
Okay. Judges ready? Opponents ready? Sorry. Okay, beginning my time now. To remind, this debate should be judged by evaluating how effectively each side weighs costs and benefits pertaining to the stance on buying Bitcoin. In other words, using a cost-benefit analysis. My opponent agrees with this framework, so I will not elaborate. Now let me address cross-sex issues. In the cross-sex, my opponent agreed to many of my points, but repeatedly brought up the point that Bitcoin will continue to grow in value. However, when I brought up the dot-com bubble event that occurred in the early 2000s, where businesses growing rapidly from the introduction of the internet greatly reduced in value after a decade, and how this could apply to Bitcoin, he did not respond. Additionally, he did not consider that the interest behind Bitcoin leads to it, I guess, being more valued. And he did agree that the interest is what leads to Bitcoin being more valued. However, he did not consider that this is actually what happened to the dot-com bubble in the 1990s. People were interested in these companies formed around the internet, and when the interest fizzled out, then the value of Bitcoin dropped. The value of the internet-based companies dropped. However, he does not scale this to Bitcoin. However, I proved in my constructive that it is likely because 60% of people who invest in cryptocurrency only do so because they're interested in the technologies. So when federal tax, such as 37% tax is imposed on Bitcoin, then it can greatly, and more strict tax is imposed on Bitcoin, it can greatly reduce the interest in Bitcoin. Now let me move on to my line-by-line rebuttal. My opponent's first contention is efficiency. His subpoint A is beneficial, and he says that cryptocurrencies have had the highest return rates. While this may have been true in the past, like I've stated in my constructive, this is no longer likely to be true. Number one, because the interest is likely to fizzle out because there's no stable asset that Bitcoin is based around, as my opponent has agreed to in the cross-ex. And like I've stated in the cross-ex, 40% of Bitcoin is held by small investors, and the rest of it is not nearly enough to support the GDP. And he stated that this was not necessarily important, that it didn't match the GDP. And while it may not be important that it does not match the GDP, it's important for transactions because my opponent has mentioned in his argument, in his case many times, that transactions is a benefit of Bitcoin. So if there's not much Bitcoin out there, not enough to support enough transactions, then this point is also not relevant because transactions depend on Bitcoin actually being in abundancy to be transacted. His subpoint B is possibility. And in this, he talks about completely peer-to-peer transactions, which can lead to cheaper transactions. However, I've shown in my point because of taxes, they're actually not cheaper transactions. And additionally, it's not completely peer-to-peer. As I've stated in my constructive, pump and dump schemes can lead to the manipulation of the value of Bitcoin and can lead to the manipulation of the Bitcoin industry. And because of this, it's not completely peer-to-peer as portrayed. And my opponent did not respond to this point in the cross-ex. His contention 2 is safety. His subpoint A is hackers. However, I've provided evidence that there have been scams because while the blockchain may not be hacked, other startups around Bitcoin have been hacked. Thank you.
Cool, I have 4 minutes on the clock for our second rebuttal, beginning when you're ready.
All right, so judges ready? Opponent ready? Okay, my time starts now. This is the rebuttal segment of the debate where I will explain why my opponent's case is flawed. First of all, I'd like to go ahead and directly move on to the line-by-line rebuttal. Contention 1, volatile. Subpoint A, there's no stable asset it can prop. Although there might not be a specific asset yet, still many companies are joining Bitcoin, gaining it steady money. People are also considering it as an alternative to gold. Although my opponent has stated that this same kind of occurrence has happened to .com, I would say that since there are so many new benefits that are given by Bitcoin, such as a decentralized currency, very fast transaction fees, people won't want to be getting rid of it. My opponent also states that the interest of Bitcoin is most likely to fizzle out, but there is no evidence of this. Meanwhile, according to the times.co.uk, many people are still very interested in keeping Bitcoin alive. So in the end, it is volatile, but it is unlikely that it is to completely fall because of all the benefits it offers. Subpoint B, it has a vulnerability to fluctuate, and apparently there's more steep fallings than increases. I would like to say that the overall growth of Bitcoin is incredibly high. It used to cost only 8 cents, and now it costs around $35,000. Although in my opponent is true that there are more steep fallings, this isn't necessarily because Bitcoin itself is a flawed system, but simply because there's a war happening right now, and this just causes everything to fall, no matter whether it's cryptocurrencies, stocks, or even just regular currencies themselves. Next, I'd like to move on to my opponent's second contention, new tech, subpoint A, less money, and how that there's less money in circulation. I would say that although you can see why there might be worry about this. I don't think it is actually there's any evidence to show just how bad it is. I mean, if there really was less money and you need a lot of Bitcoin for transactions, many companies like PayPal and Microsoft wouldn't start accepting Bitcoin if there weren't many available Bitcoin transactions. What I'm trying to say here is that sure, maybe not all of the Bitcoin is in circulation, but there's more than enough right now. And plus, we still haven't mined all the Bitcoin just yet. And in a way, if we have less money in circulation, this could mean that that Bitcoin could have a higher scarcity technically, which could increase its price. And then there's subpoint B. It's an easy fraud and hard to track. I would just say, as long as you're careful with how you spend and purchase Bitcoin and be careful with your own information, there is nothing to worry about here. It is, in the end, any hacked as long as you're not careful with your information. As for it being hard to track, although your personal information is not identifiable, the Bitcoin can still track your IP address, which can lead towards you. So I wouldn't say that it's impossible to find hackers through Bitcoin. Finally, there are contention C. There are better alternatives. Subpoint A, it has higher energy costs and Ethereum is better. Well, I would say that Ethereum also has incredibly high costs. For example, they have this little something called gas fees, which can be incredibly expensive on people, and especially people who are just trying to start getting into cryptocurrencies. So Ethereum is relatively new, and I wouldn't want to put as much trust into Ethereum as they've put into Bitcoin. As Bitcoin, I would say, is more reliable as we've had it for longer, and it's had a more general upward trend. My opponent might argue that Ethereum had a higher cost, had a higher increase in worth, but at the same time, you have to remember every new anything that originally happened originally had a lot of hype around it, and its price went up. But Bitcoin has had a steady increase in worth. Finally, there's subpoint B. Ethereum is much better and will overtake Bitcoin. Currently, Bitcoin has more users, and I still don't see Ethereum beating out Bitcoin, and Bitcoin's worth is higher. So I'd say for now, Bitcoin is still better than Ethereum. And I would like to, and thank you. I would like to end my rebuttal.
Cool. We're going to go into a period of prep time now. I have 2 minutes on the clock, beginning now.
Judges, are you ready? Opponents, are you ready?
Yes.
Beginning my time now. To remind, this debate should be judged by evaluating how effectively each side weighs costs and benefits pertaining to their stance on buying Bitcoin. In other words, using a cost-benefit analysis. My opponent has agreed with this framework. Now, let me weigh my impacts of my constructive against my opponent. My contention 1 is volatility. My subpoint A is no backing value. My subpoint B is vulnerable to fluctuating supply and demand. The impacts of these points are the time impact. Because cryptocurrency doesn't have a backing value and is not based around a stable asset, and it has been shown in the past that even after a decade, many companies have crashed because of sizzling out of interest, then the impact of this point is that over time, the interest will sizzle out and eventually cryptocurrency won't be valuable anymore. And I also have a convenience impact because I mentioned that it's not convenient to have cryptocurrency which fluctuates in supply and demand for transacting purposes. And my opponent's contention 1 also mentions that that like transactions are a positive of cryptocurrency, yet this contradicts my first contention because I state that it's inconvenient to have the value fluctuate if you're using it for transactions because you have to constantly check what value it is. And if the value has diminished, then you're at a loss. My contention 2 is relatively new technology. My subpoint A is blockchain technology not established. My subpoint B is risk of fraud/theft. And the impact of this is I explore the transactability of Bitcoin, and I show that because the blockchain technology is not established and 40% of Bitcoin's value goes to small investors, then Bitcoin is not easy to transact like my opponent has stated. So my impact outweighs his. My contention 3 is possibly better alternatives. My subpoint A is less energy intensive options. My subpoint B is low barrier of entry. And I have a unique argument impact that my opponent does not have. Now let me move on to my voters. Voter 1, consideration of different points. In Con's case, he He repeatedly stated that Bitcoin will grow in value, mentioning that the scarcity of Bitcoin will lead to its value shooting up without providing sufficient proof that it will do so. Additionally, he acknowledged that Bitcoin is very volatile in value, but did not consider that his points depend on the idea of it being easy to transact. So if Bitcoin is highly volatile, then why would it be easy to transact if you never know what the value is? My opponent also did not consider that my point that while cryptocurrencies are not controlled by the governments, like he stated in his contention 4, they're greatly affected by pump and dump schemes. Voter 2, unique arguments. I brought up alternative cryptocurrencies. Voter 3, stronger weighing of costs and benefits. Because of these reasons I have outlined, please cast your ballot for con. Thank you.
Cool, I have 3 minutes on the clock.
Judges ready? Is opponent ready? Okay, my time starts now. This is the summary section of the debate where I'll explain why the pro should win this debate. First of all, I'd like to go over some of my opponent's claims. My opponent has stated that the volatility makes it incredibly difficult to make transactions in Bitcoin. However, the volatility isn't so high in Bitcoin that you could have Bitcoin costing, for example, $1,000 before a transaction and all of a sudden only costing $100 after it. Sure, it does change by a lot, but it's not so bad that you have to worry about every single transaction you make. Next, I'd like to go ahead and quickly recap my arguments as I wasn't able to do so in rebuttal. Contention 1 was inefficiency. Subpoint A was that purchases are beneficial. Subpoint B is that it's versatile due to its decentralization and quick transfer speeds. Contention 2 is safety. Subpoint A, hackers. Bitcoin has very revolutionary technology that makes it impossible to hack. And although there have been scams and hacking of wallets, Bitcoin's blockchain itself hasn't been harmed. So as long as you keep your information safe, you are no in danger of being hacked. Compare this to the Federal Reserve, which has been hacked 50 times in the last 5 years. Subpoint B, the government. Because Bitcoin has no third party, no one can control what you can and cannot spend. Contention 3, scarcity. Subpoint A, Bitcoin cap. Bitcoin is only going to have, it can only code it to be, can only have 21 million tokens at max. And once this happens, the price of Bitcoin will skyrocket. Subpoint B, Bitcoin can also be a reliable replacement for gold as it's easier to transfer, it's better for payments, and it can't be confiscated. Next, I'd like to go ahead and quickly go over weighing some impacts. The price of Bitcoin is much higher than the price of Ethereum, so therefore it has more value than Ethereum, which is one argument as to why Bitcoin is better. Second of all, the users of Bitcoin is much higher than the users of Ethereum, which makes it so that if Ethereum is affected by something, it'll be much more volatile than Bitcoin. So essentially, Bitcoin is a much better option than Ethereum. Finally, my third impact is that the safety of Bitcoin is much better than the safety of fiat currencies. Bitcoin has complex codes that make sure that every single ledger and every single transaction are reviewed and make sure that they cannot be hacked. In fact, according to Investopedia, Bitcoin itself has never been hacked before, only the users' wallets. Next, I'd like to finally go over some voters. Voter 1, my opponent has no response to how fast crypto can transfer, and it's relatively cheaper prices for transferring internationally. Voter 2, my opponent has no response for the free trade through crypto you get that could normally be limited by governments. And finally, voter 3, my opponent is giving a lot of potential costs. Bitcoin could fall. People could get away with robbing Bitcoin. If Bitcoin could completely fall, Bitcoin can drop a lot. And although there are historical evidences, my opponent is only giving potential costs while I've shown direct benefits. And voter 4, I have shown a much better balance of benefits than costs for Bitcoin, and that is why I believe I should win this debate.
Cool, that concludes this debate.